Ladies and gentlemen, today, August 11th, we are coming at you with a much waited upon episode of Exit Liquidity. We haven't done one in weeks or maybe months, but we're here. How you feeling about the market, Senpai?
Yo, yeah, things are looking optimistic. A lot better than at least a couple weeks ago. Yeah, Bitcoin is at around 120K. Ethereum is back over 4K, which is blowing everyone's mind. And Solana is just doing Solana things, kind of trading sideways this time.
Yeah, we're seeing some signs of life out of the market. I mean, just a few weeks ago, Bitcoin was trading down at like 110, 112, popped back up. We did technically hit an all-time high last night on Binance Spot USD,
Really?
so we'll call it how it is. We did technically get an all-time high, but vibes do seem to be back. ETH above 4K, love to see it. Traditional finance definitely seems to be the primary driver in that specific niche, right? The ETF inflows. Yeah. We're seeing treasury companies like BNMR or SBET. I mean, BNMR alone now owns 1.1% of all Ethereum.
Really? 1.1%?
1.1%.
That's shocking.
And SBET was like, yo, we'll raise 1 billion. And they're like, no, scratch that. We're going to raise an additional 5 to total to 6. And at that time when that PR came out, 6 billion was 1% of ETH supply.
Wow.
And so we cannot ask for a better market dynamic than TradFi bros, A, buying the ETF, or B, raising money to buy our bags. Like, this is the most idealistic situation that we could have really asked for, where they're just printing money to buy our shit.
I mean, essentially. I have some SBET shares, and what they're doing right now is they're doing like at the market raises. So they're essentially diluting their shares to buy more Ethereum. It hurts right now, but I'm sure it's going to pay off eventually. So I know that even though Ethereum was way up over the past couple of days, SBET was actually down today because of that at market offering. But yeah, I think if people who are faithful and continue to stack SBET it'll eventually pay off.
Yeah, and I think these treasury companies it's kind of the beginning of what I would say like a bubble of a bubble. It's like these traditional finance bros have realized they can buy defunct companies, put crypto on their balance sheet, and then that pumps the crypto's price. So it's like we have a bubble in TradFi centered around a bubble of a crypto market. I can't imagine it's going to end well.
Yeah, it's hard to see where this is going to go.
Right? Like, it's really hard to see the finish line from where we are currently in the treasury company market. But it seems like it's a lot of fuel to the fire, and crypto needed it. By and large, we were struggling to get some momentum, but it seems like we found a new catalyst.
So do you think these treasury companies are a buyer now?
I would say some of them are. I mean, like, for example, BNMR, I think it was up 20% today, August 11th. You can probably skip that one. SBET was down today. Maybe take a look at that one. There are some other interesting ones that have popped up. So, for example, SPTZ, I think is one you put it. SPETS.
Yeah.
It's the Sonic Strategic Reserve. Sonic.
Ayo.
Price action's dog shit. But hey, there's a treasury company. They're listed on the TSX, I believe. Or another one that was catching a lot of traction on Twitter was SONN, SONN, which was for lack of a better words, a morbid biotech company that did stuff with ophthalmology. I don't really know what was going on, but now they hold Hyperliquid on their balance sheet.
Wow, that's pretty high.
Yeah. And so they're being converted from SONN, Sonnet Biopharmaceuticals, I believe the full name is, to the Hyperliquid Strategic Reserve. There's going to be a crazy dilution event in the future, which is probably why it hasn't appreciated that much. But it's really fascinating to see this gain traction because they're printing money to buy our bags.
Yeah.
Retail is broke. TradFi is not. They have infinite capital. Retail doesn't.
Yeah.
So, it's a good catalyst, but I think this really highlights the idea that there's a delineation between blue chips and the rest of the crypto market.
Yeah, that really has been the theme of this cycle. We all knew, and we've been saying for years that this cycle would be driven by institutional demand, and retail are really feeling a lot poorer than in previous cycles. I think we underestimate how much the 2021 cycle was fueled by just helicopter money from COVID relief. And this time, by and large, like retail are kind of struggling.
I agree. I mean, I saw on the way here that Canadian unemployment's almost at 7%. Interest rates, by and large, are still high across the country, especially in the US. And like retail is going to be what causes that euphoric alt season, right? In 2021, you'd buy an altcoin on Monday, and by Friday, it had doubled. We're obviously not there just yet, right? So when we're looking at that broad spectrum, crazy green days across the board, I really do think lowered interest rates are going to be the catalyst for retail to have that appetite for risk again. And until that happens, I'm really just expecting Bitcoin, ETH, Sol, like the ETF coins, to really show the most strength.
Yeah. And probably one of the biggest like misunderstandings is that the money will flow from these big large cap coins into the altcoin market. Because a lot of this money is going into these ETFs and is staying like within the TradFi system. Yeah, it's like it's a lot harder to see like that money kind of flow into the altcoins.
Yeah, like there's no decentralized application that you can use to swap your ETH ETF into an NFT or swap your ETH ETF into some form of ETH beta, right? Like that money is locked in traditional finance. It's not necessarily entering the crypto ecosystem. So there's been that chart shared where it's like stage 1, Bitcoin, stage 2, Ethereum, stage 3, altcoins. It's like that is the most bullshit fucking chart. Maybe that worked in 2021 or 2017. But that paradigm, that mental model, I think is completely abstract in the current market.
Totally. Yeah. And man, just like the people who are like kind of failing to adapt and like failing to realize that those are the people who are probably really struggling this cycle because like last cycle, you could literally throw a dart at the board and pretty much everything would outperform Bitcoin. And this time, it's not the same.
Just not the same. I mean, if you want to experience pain, look at your alts relative to US dollar. If you want to experience suffering, look at your alts relative to Bitcoin because it's probably much, much worse. And so that's something that I think we've been very vocal about transparently throughout these podcasts and newsletters that we've done is that institutional demand is what drives the market. And that's what we're continuing to see, right? Bitcoin at all-time highs and most alts are down 60, 70, 80, 90% or more. And that's just the reality of things. There's not that liquidity to drive altcoin prices.
Totally.
Ethereum does appear ready to hit all-time highs, though.
Yeah. Ethereum is looking pretty fantastic right now. We just popped past like 4K. We rebounded off 4K 3 times in the past 2 years. And now we're finally breaking through. And it really seems like there's nothing in between here and previous all-time highs of 4,800 way back in 2021. So I think that's probably one of the easiest trades you can make as long as you're not using like too much leverage.
Yeah, I think people have infatuated themselves with this idea of Ethereum beta. And it's like the real Ethereum beta is just leverage trading ETH. You could make some exceptions, like, of course, Athena Labs, ENA, super innovative product offering that stable coin tied to Ethereum. I think that is a great Ethereum beta. But at the end of the day, you're not going to get those kinds of returns that you're looking for from the Ethereum ecosystem compared to just slapping on 5x ETH leverage, buying on dips, and holding with a high time frame. Because, like you said, we're only, I mean, what would that be? About like 15% away from all-time highs for ETH. Super close within striking distance. The ETH BTC chart looks phenomenal. Has a lot of upside. It's outperforming Solana by a very large margin. From June until now, I believe ETH is up 80%, while Sol's only up 20%. And the ETH Sol ratio is also starting to shift as well, meaning that people want Ethereum and they're selling Solana to buy it. ETH dominance is also trading at like a 180-day high as well. So we're seeing all of these indicators that ETH is going to continue leading this charge. And part of the reason why is because it has that ETF, while Solana doesn't. And so I think when the Sol ETF does come to market, there could be a little bit of shift in demand of where that money is flowing. But as of right now, I mean, Canada has a Sol ETF, but who the fuck cares?
Well, I think there is like a Solana ETF.
Yeah, but it's like a really weird like futures product. I don't even understand the Solana ETF that's available in the US.
It's not that popular. I've seen the inflows. It's like pretty sad numbers. So I think they're waiting for like the big dogs like BlackRock and Fidelity to step in.
I mean, the gold standard would be Solana ETF. The platinum standard would be Solana ETF with native staking yield as a dividend. Will we ever get that? Who knows? Because that staking component is definitely very controversial in the current regulatory landscape.
Well, just like last week, we got some clarity with regards to staking, and it was deemed like not a security.
Yeah, shout out Paul Atkins at the SEC for clarifying that. Because I mean, Gary Gensler is probably stirring in his grave wherever he is. Because that staking component is definitely a point of contention. Is it a security? Is it not a security? Are you getting that dividend as a product of the company or as a product of the network?
Yeah.
A lot of intricacies there that I'm not qualified to speak on, but that is, from the traditional finance point of view, I think that's a really appetizing component
they're
to
licking
it.
their chops right now. They're going to make so much money from the assets they hold. And now they can earn yield on it. Like that's more MER that they can
exactly.
peel away from it.
It's just extraction. But one thing in the Canadian ETF market, there's ETHY, which is the Horizon Purpose instrument. Have you looked at the yield on that recently? It's over 20%. It's over 20% because it's the ETH ETF with native staking and covered call.
Oh, wow. Okay.
So there's two sources of yield packed into one.
Yeah.
The last time I looked, it was over 20%, and it pays you every single month. So you're getting over 1% a month, which is crazy.
Yeah.
And so I think there's like, obviously the native staking yield is important, but even a covered call ETF, I think, is very attractive to traditional investors because you get that dampened volatility in favor of higher monthly payments. Super cool.
Yeah, it is interesting.
The other thing kind of in note with this Solana's kind of been underperforming recently. Like I said, from June until now, ETH was up about 80%. Sol was up about 20 or 25. Sol BTC, very much stuck in a range, not seeing much momentum. Sol ETH favoring Ethereum. What's the catalyst for Solana? Is it the crime chain? Is it cooked? Has Pump Fund ruined it? What's your take here?
Yeah, I'm not as confident as you are in the Solana ETF being like the solution. If you recall, when the Ethereum ETF listed, it was like definitely a buy the rumor, sell the news event. And we thought there was gonna be huge inflows, and it was like dead. It wasn't until very recently where we started to get a lot of people parading around on like Bloomberg News and MSNBC, like pumping it up, where you could tell that like the institutional investors like started buying and accumulating. What was really interesting and isn't really mentioned a lot is the correlation between when options were enabled on the Ethereum ETF. It literally is like to the week the bottom of Ethereum, like in the past 2 years, and when the price starts like rocketing upwards. So I wonder if that was like they were waiting for that event. The same thing happened with the gold ETF, like way back in like 2000. It's like no one really cared until like options were enabled, so they can go like get extra leverage on longs, where the price like doubled and tripled within like the next year. So I wonder if the same thing will happen with the Solana ETF, where it's kind of like a nothing burger for the first like 6 months until options are enabled, and then you start hearing about like how it's like a wonderful new invention, and it's like so fast, and TPS all of a sudden like back in the conversation.
A shift in the narrative, right?
Yeah.
One of the other compelling things is, specifically speaking for like this June, July, August rally, we covered it in our newsletter, was the shift in inflows from Bitcoin to Ethereum. There was multiple times in July where ETH had higher inflows than Bitcoin.
Yeah.
And that was the only time that had ever happened in the history of ETFs. It started off as ETH and BTC inflows are equal. ETH's a little bit higher. And there's one day where I think ETH had almost $700 million in inflow, and Bitcoin only had $200 million in inflow. So I think it highlights this idea that they're sliding down the risk curve where it's like, yo, Bitcoin's sick, but if we buy ETH, it outperforms Bitcoin.
And it's funny because like not much changed during that time.
No, nothing at all. It's just like a shift in narrative because it's the idea of like outperforming. So it's like you buy SPY, that's the benchmark. You get your 8% per year, whatever the average is. And you're like, okay, let's buy NASDAQ. NASDAQ maybe gets you 10% a year. Okay, now let's buy Bitcoin. Now let's buy Ethereum. Because at the end of the day, regardless if you believe in this grandiose theory that crypto and Bitcoin are going to replace our money as we know it, it doesn't matter if you believe in that from a traditional finance point of view as a portfolio manager. What matters is your average return per year. So like they can skip all the fundamentals. They're just here for number goes up.
Yeah.
Right. And so to some degree, the thesis of crypto succeeding is number go up.
Yeah.
Right. Portfolio managers, their sole job is to do well. right? And so if they buy the SPY, then they're going to buy the NASDAQ, then they're going to buy Bitcoin, then they're going to buy Ethereum, then they might buy Solana, because objectively, Solana is cheaper than Ethereum in terms of market cap. And so that's why I think the Sol ETF could be a catalyst for Solana to start doing well in terms of its BTC and ETH ratios, is because it's like the Toy Story meme. I don't want to play with you anymore. Because if they start getting better returns with Solana, then to some degree, why would they buy Ethereum? And so it's going to be really interesting when that Solana ETF does come to market, if there is that instant traditional finance appetite for it. Because, I mean, we've said it like 6 times this episode, but institutional money is driving the market.
Yeah. It would be pretty easy to shill like the broad market on Solana as well, just with how many retail users there are, amount of transactions, trading meme coins and stuff. It's all happening on Solana right now.
Yeah, exactly. I mean, even in terms of like its revenue as a product, it's higher.
Yeah.
It's got more users. It's got more daily active users.
Mhm.
It's got more DApps. It's got more tokens on it.
I do more transaction like payments for things like Bitfill.
Yeah.
I'm using Solana because it's like instant finalization with their transactions. Yeah.
Exactly. Like it's just a sexier idea.
Mhm.
ETH is 3G. Solana is 5G. That clicks with TradFi bros, right?
Yeah.
The other thing, a lot of interesting things happening in the Solana ecosystem. We will give it some credit here, specifically about private companies being traded as public assets.
Yeah.
Super fascinating experiment. I believe it was Jupiter that brought this to market, where you're able to trade private companies like XAI, Anthropic, Kraken, loads of these privately held companies that are anticipated to go public at some point. But now we have this really cool financial experiment where the public market is finding a fair value before this offering even happens.
Yeah, that's really cool. And previously, if you were an accredited investor, you could get access to these markets. You'd buy like lots of other people who are like accredited investors, and like they could like trade amongst themselves to get exposure. But now, yeah, it's like anyone can get access, which is it's kind of liberating in a way.
Super liberating. I mean, it's the democratization of finance at its core. It's internet capital markets, baby. ICM. Super cool experiments happening on Solana. We got to give it some credit. We're not saying Solana's cooked for the rest of the cycle. What we're saying now is that the data is telling us Ethereum is winning, and the major catalyst or roadmap item to look out for is the Sol ETF coming to market, because that could change the trend that we're on.
Yeah.
Speaking of kind of the TradFi lens, Donald Trump, the man, the myth, the criminal, has signed an executive order allowing 401ks to invest directly into cryptocurrencies. What are your thoughts?
Yeah, I mean, there are a few assets like private equity, commodities, and cryptocurrencies. So that's like $8 to $9 trillion of investable assets, which can now get exposure to crypto. Obviously, like another just like bullish narrative for us. But there is like some criticism as well with regards to like private equity. A lot of people saying it's like struggling at this time, and it could just be like kind of like another off ramp. I always used to joke that like when a company goes public, like that's when they can't do rounds A through Z. Like they've exhausted all their other options, and now they have to like dump onto the retail client.
Yeah,
I hope that's not the case.
Yeah, I don't know. I think this is going to end one of two ways. One, we're going to get really rich, or number two, the global financial system is going to implode, because it's $8 trillion of value in those 401ks.
Yes.
And we're going to open the floodgates to the most volatile asset class on planet Earth. Now, by and large, most people probably won't participate, at least to start. But as we approach this hyper Bitcoinization, right, the $1 million target per Bitcoin, I think there is going to be a severe amount of FOMO.
Yeah.
Right? And it doesn't matter how seasoned of an investor you are, you're always going to have that burning sensation of, fuck, I should have bought Bitcoin at 5K.
Yeah.
I should have bought it at 10, 20, 40. And it's just going to continue for the rest of our lives. Because at the end of the day, like we talked about, Bitcoin, it doesn't matter if you believe it's the future of money. It doesn't matter if you believe the politically agnostic store of value. It is a financial instrument that is wiggling itself into the foundation of global markets. And not holding it hurts.
Yeah. Everyone gets Bitcoin at the price they deserve.
It's a good quote.
Yeah. I also was reading today that people were discussing MicroStrategy getting added to the S&P 500. It's kind of like a growth hack right there. Every time a company gets added to one of these major indexes, like the price just like pops.
Yeah.
Like nothing has changed. It's just like you get more exposure, and it's like an automatic like 10 to 15% boost in total market cap.
Yeah, I think the buzzword is passive flows.
Okay.
Because it's all the people buying like SPY or any of the Spider ETFs. It's like they buy the ETFs and the ETF holder has to buy MicroStrategy. It's the same idea that Bitcoin is being included in BlackRock's, I think it's called the Global Growth Fund.
Oh, yeah.
It's like 5% of that Global Growth Fund is their IBIT ETF. So when people buy the Global Growth Fund, they're indirectly buying Bitcoin. I think that idea of passive flows, obviously it's important for MicroStrategy in the S&P context, but it highlights that idea of crypto's integration with traditional finance, where it's like to some degree, people will own exposure to crypto without exactly knowing it.
Yeah. So
another thing, kind of speaking on this, I guess, hyper crypto finance is Hyperliquid.
Oh, yeah.
Hyperliquid been going absolutely crazy, set an all-time high, I believe, at $48. Obviously, very hot topic in the world of cryptocurrency. People are calling it the future of finance. We've been talking about it for a very long time here. But we're seeing a lot of innovative changes. Specifically, a new product came to market within the last 18 hours at the time of recording called TH Bill. And it's a spot product that represents US short-term securities. So it pays a native yield, I believe, of about like 4.7%. And so it's kind of like a pseudo stable coin in that regard, where it's somewhere you could put money and the yield that you get is factored into the price of the asset, kind of like JLP with Jupiter. And so the yield you get would be factored into the price appreciating. It's not like you get a USDC deposit or anything. But I think this is another really interesting example of how crypto is becoming more and more like traditional finance. The integration and like the melding of the two worlds is happening in front of our own eyes. And Hyperliquid seems to be kind of at the forefront of it. Yeah. Especially, are you familiar with HIP3? No. Hyperliquid Improvement Proposal 3.
I don't know the third one.
So the second one's come to market. That was actually Hypercore.
Okay, yeah.
Hyper EVM. HIP3 is coming soon. No date, no time. As you know, they just like to surprise people with it. But HIP3 is super cool because it allows for trading of non-crypto assets on Hyperliquid.
Cool.
So an example would be you'd be able to trade the SPY on Hyperliquid. You'd be able to trade the NASDAQ on Hyperliquid. You'd probably be able to trade pre-IPO stuff on Hyperliquid.
Wow.
There's a project that me and Senpai, pardon me, both really like called Volmex.
Yeah.
Volmex offers volatility indicators for crypto products. So there's one called BVIV, there's EVIV, there's SBIV. And so BVIV is Bitcoin Volatility Index. It's like the VIX for the S&P, but for Bitcoin.
Yeah.
And that's going to be coming on Hyperliquid as soon as HIP3 goes live. And again, highlights this idea of like the integration and commingling of crypto with the traditional finance infrastructure.
Cool. I actually didn't know that. I didn't know it was going live on Hyperliquid.
Yeah.
That's exciting.
That's going to be the first. I mean, it's currently traded on Gains Network, GNS.
Yeah.
Which is like, it's like a defunct GMX fork.
Okay.
That's its own network. Yeah. It's pretty weird. Yeah. But they've already done $20 million in trading volume.
Yeah.
Super cool product.
Yeah.
And the reason I'm bullish on Volmex is because these volatility products have a very strong product market fit. Especially when we're talking about these treasury companies like MicroStrategy or even just whales. Like if you hold $1 billion worth of Bitcoin long and you have no downside exposure, super risky.
Yeah.
But these volatility products could help dampen some of that risk that they assume by holding so much of this on their balance sheet.
Yeah, totally. I mean, the VIX is an incredibly popular product, which a lot of people use as a hedge or just to trade when they're kind of expecting some sort of period of volatility.
Yeah, I think there's a really strong product market fit, especially when you consider that BVIV, for example, you'll be able to trade it on leverage.
Yeah.
It's the same as underwriting options for VIX.
So, kind of like on that topic, where do you think we are in this cycle then? It's like it's a bit strange. It's like does the 4-year cycle even exist anymore? Are we behind schedule or?
I think the 4-year cycle is cooked. I think the 4-year cycle is over. I think crypto's directionality is pretty much solely determined by the booms and busts in the stock market.
Yeah.
Right? Like we've seen this, like when ETF flows pick up, crypto resumes its up. When ETF flows dry up, crypto gets sold. And so again, we've talked about like the delineation of Bitcoin and crypto. But when we were talking in June, the reason your altcoins weren't going up is because nobody was buying them. Network emissions and token vesting.
Yeah.
Right? Just slamming into empty order books. Meanwhile, Bitcoin, ETH, Solana kind of hold their ground. But I really do think that the 4-year cycle is cooked and the market directionality completely depends on the equities market.
Yeah. And just like what interest rates are going to do. We've been teased like interest rate cuts for years now. I feel like it's just getting dragged out longer and longer. And it seems like it is finally on the horizon. If you take a look at the expectations market on CBOE, I think it's like we're still getting like a rate cut at the end of the year or something.
They're pricing in two
rate cuts.
Two rate cuts in 2025. The first one being in September because August they take off. There's no Fed meeting in August, from my understanding. Fact check me, I might be wrong, but for the September meeting, they are expecting a 25 basis point rate cut. Jerome Powell said the same thing. 2 rate cuts are on the table. Obviously, we'll see what happens. But I think if we're aiming for that 2020 bull market, buy on Monday, sell for 2x on Friday, I think interest rates are going to be the major catalyst for that to happen. Now, some sectors might do well, whether it's meme coins as flavor of the month or AI coins as flavor of the month. I think there is going to be that kind of rotating game of capital, but I don't think we're going to see a full-fledged everything up egregious amounts until we see interest rates lower. I think that's going to be a major catalyst because, like we've talked about, retail doesn't have the money to speculate.
Yeah, and I still think that the like bull market in the traditional equities world, it will continue. If you take a look at, remember that chart, which is like the S&P 500 divided by M2, it's like we're only actually just about to reach new highs. The previous highs were in 1999, 2000 during the dot-com bubble. Now we're in the AI bubble, which is like, the last bubble.
The bubble to solve them all. So I think the S&P divided by M2, super captivating chart, right? Because it shows equity appreciation in isolation of money supply changes. So when this chart is trending up, it means there's actual value being created outside of changes in currency supply. Now we're right at the point where we were at the dot-com era. And I guess I'll ask you, how far into the AI bubble do you think we are? First third, middle, last third?
I mean, every day I'm surprised by what they're able to pull off. And it just seems like if this is the worst it's going to be, and it's only going to get better, like, I feel like we got a couple of years to go. And it feels like the next kind of extension of the AI bubble will be like humanoid robotics, where they're no longer coming for your like ability to write poetry, sing songs, and code, but also like your ability to like lay bricks and do the dishes and that sort of thing. Like that seems like the next kind of frontier in this AI.
I agree. I think we're in the first third. I feel like the market has maybe gotten ahead of itself in terms of pricing hardware companies like Nvidia because it's the obvious infrastructure play. But in terms of where we are with AI's potential, like AI has yet to invent a new technology. It's coming and it's going to happen very soon. But I think in terms of where we are with like the ASI to AGI transition, I think we have a long ways to go because AI at itself is a fundamentally value generative technology, which markets love. And in terms of what we believe to be possible, whether it's human robotics or anything possible with AI, we're not quite there yet. And so I would agree. First, third, we still have many years to go. And I think that is a very major catalyst for the crypto market. Because if stocks are going to continue trending up as long as the AI bubble persists, crypto is going to come with it. Because it's that dilemma of, okay, I want exposure to AI, so I buy the NASDAQ. Well, fuck, Bitcoin's outperforming the NASDAQ. Okay, I'll buy Ethereum. I really do think that is a super prevalent mental model to work with because from the lens of a portfolio manager, all they care about is P&L. And so it doesn't matter if you capture the AI bubble alpha by owning NVIDIA or NASDAQ or Bitcoin or Ethereum. All that matters is number go up.
Yeah.
And so there is definitely going to be bumps in the road. Like there's no doubt about it. There's going to be some pretty devious market swings, let's call it. But I have 100% conviction on the high time frame trend.
Okay. That makes sense. Yeah, no, I'm totally in agreement. So it's this equity bubble will continue to keep going. And any sort of like, I mean, if you look at the past couple of drawdowns where the market has dropped like 15%, like it's getting bought up at a faster and faster rate. So keep in mind, like there is no limit to how much money governments can print. And if it's the easy way out, then that's like what they're going to continue to do. So if we do see another like black swan event, I'm sure that they'll just print money to grow over it.
Like the plan has been in motion since the dot-com era. The dot-com era was the warm-up. 08 was lighting the match, and 2020 was putting gasoline on the floor. At a point in time, they had to choose the economy or the dollar.
Yeah.
And they very obviously chose the economy. The dollar's been written off, right? The rate of inflation, if you believe it, which is also a point of contention, like the rate of currency proliferation is only increasing, and we're making more money on a daily basis than used to exist in all of humankind. And so when you look out on a high time frame, that trend's not going to reverse anytime soon.
Yeah.
And so the answer is just own assets.
Yeah.
And the unfortunate reality of things is most people don't own assets.
Yeah, I feel bad for the next generation kind of trying to enter the workforce right now because more and more of these like start level jobs are just being eliminated. And yeah, you have to reach that, what I like to call it, safe velocity, where you hit a certain net worth where your money is working for you by investing into these uh, large cap companies, which are really taking over the broader economy. And yeah, a lot of people are just kind of like too late to that. I guess maybe they'll have to rely on like inheritance or something.
They don't see the forest from the trees, I guess. I tweeted it last night, but like, we both live in Canada. We're in Vancouver now. And I firmly believe that life in the West will probably be not worth living unless you're rich.
Well,
right? Like,
yeah.
I mean, like when the median income in Vancouver is $65,000 and the average home costs over $1 million,
it's scary.
There's a fundamental disconnect.
Yeah.
Between what people get paid and what they can afford. And the answer is you invest. But when cost of living is so high, how do you invest? And so I think it's really easy to be pessimistic looking at society, but the answer is get your bread up. Plain and simple. Like if you want to escape the matrix, you have to own assets.
Sure. And
it sucks to say, but it's an unfortunate, it's the reality of the situation.
Yeah, that is a terrifying reality. I mean, even like the most brutal teardowns. I know we don't want to get into real estate here, but it's like the most like brutal teardown in Vancouver is like 2 million plus.
Yeah.
And it's like we're probably we can edit this out like the 1%.
Yeah.
For that shit.
Legit.
Yeah, it's like so people who are even in like the 1% of earners and assets for, you know, people age 30 around there, still can't afford to buy a house in Vancouver without like liquidating everything they have and going into debt. It's like that is a really scary reality. You're seeing like families, you know, grow up in these tiny shoebox apartments, whereas and like retirees living in these mansions.
Yeah, there's a fundamental disconnect in the market. I think it highlights the idea that every generation, speaking in the West at least, had an opportunity. People our grandparents' age, it was post World War II. You had an untrained profession where you made a lot of money. You bought real estate that went up in value, and you bought assets in the stock market that appreciated virtually infinitely. If you look at people our parents' age, they may or may not have gone to school for a good paying job. They bought real estate that appreciated a lot, and they invested in assets.
Yeah.
Right? Like, very similar. And then if you look, and they also had the dot-com bubble.
Mm-hmm.
If you look at our generation, okay, so cost of living is high, compensation is proportionally low, you have to accrue debt to get a professional job. What do we really have? And the answer is AI.
In crypto.
Right? AI, like, the unfortunate reality is that if you're not hyper gambling,
yeah,
you're probably fucked.
Oh, no one will tell you that. Before the age of 25, you have a couple years to just gamble your life savings and try and make it get as rich as possible.
Because the alternative is like, what, you work till 65 and you get a pension that may or may not be solvent by the time it's ready to be claimed.
Yeah.
Like the outlook is very bleak. Obviously, we are very biased. We are crypto native investors. We look at things through a certain lens, but I think it's undeniable the current trend of like the West is falling, the dollars are weak. The only answer is buy assets.
When did you kind of make that realization? Like I'm interested in just like hearing, because like for myself, yeah, it was like I recall like getting my first job, like this is how much I'm making. Like I made $45,000 like as an investment assistant out of college. I'm just like doing the math, and I was doing the taxes, and I'm like, I'm saving like no money. Like how am I ever gonna afford a place? It was like, yeah, like I was living at home, like not paying any rent at that time because I was and like not paying for food either, because like living in my parents' basement trying to save money. Um, and like that's when it kind of hit me. It was like I gotta like do something entrepreneurial or just save my money and just like invest as hard as possible. Because I didn't like it, even making like 200K, which would be like a pretty ridiculous salary here in Canada. It's like you're still not even remotely close, like rich enough to be able to buy like a decent house here.
Yeah, for me, I would say I first got into crypto 2016. And that was like in a very elementary form. And then in 2017, me and my friends that were also all getting into crypto at the same time, we did a lot of asset together. And we talked about like the socioeconomic context of like where we're going. And I would say that was a very formative moment in time.
Yeah.
In terms of like, the time is ticking, dollars are fucked. How do we fix this? And so I've been very vocally a Bitcoin maxi for a very long time.
Yeah.
And I don't want to attribute it all to LSD in 2017, but that was probably a major composing factor of like it was the butterfly effect. The light bulb turned on, and that really began to change how I look at things.
That's pretty incredible that you had the foresight way back then.
In hindsight, it was obvious, but yeah. I don't know. I was just in university. I was in university from 2014 to 2018. And then in my third and fourth year of university is when I started to discover my passion for digital assets.
Nice. That's good.
Another really interesting thing happening in the Solana ecosystem, the launchpad battles. Who's winning? Is it Believe? Is it Pump Fun?
That was bad guy too.
Oh yeah, true. Is it Let's Bonk? What are your thoughts on the current landscape of launchpads, let's call it?
Yeah, there's a really good quote from Tully, who's the founder of Solana, and it's like, there is no moat. And we've seen the launchpad wars just kind of like flip back and forth between Pump Fund, Bonk, and some other apps as well. There's now 70 plus launchpads. So it's very competitive. And yeah, it moves so quickly. Like just 2 weeks ago, Bonk had over 80% of the total market share in terms of like volume, and now it's like 90% in favor of Pump Fund. I mean, a lot of it feels quite manipulated.
It feels like there's like I forget what the term is, but there's like an orchestrator behind the scenes shifting the narrative where capital and attention is going. Like you said, 2-3 weeks ago, Bonk was winning. People were saying, fuck Pump Fund, garbage, founders, greedy. But now we're seeing Pump Fund back in the spotlight as Alon has been saying they'll be injecting significant amounts of capital into organic communities. Right. And so this is something that I don't think makes sense. Like we have Apple phones, we have Android phones, we have Huawei. We live in a capitalistic society where the market determines what they want to use. And so this whole narrative of launchpad wars, I think is completely fugazi. I think it's orchestrated. And more importantly, I think it's completely irrelevant. There's always going to be competition. There's always going to be new competitors. There's always going to be someone finding a new product market fit. And to try and speculate that there's only going to be one single winner, it's completely stupid.
I mean, Pump Fund definitely have the advantage at the moment, knowing that they're like war chest to like
over $1 billion.
Over $1 billion.
What they haven't sold on Kraken. It was always funny seeing the Pump Fund wallet send like hundreds of millions of dollars to Kraken, and then you look at the Solana price and it's just like very obviously a T-flop to the downside. And it's like, God damn it, Alan, stop selling. Obviously Pump Fund had their token Pump come out. Price action super disappointing. We both got liquidated on pretty big size. Yeah, we got rinsed on that one. I'll openly admit it. But that was also another cool experiment on Hyperliquid.
Yeah. It was
right? Like
farming the airdrop here.
yeah, our bespoke volume farming strategy.
Yeah.
Just like that fund that blew up.
Asymmetric.
Yeah. That's what it was called.
By Joe McCann. Yeah. Gotta roast that guy.
But it was a really cool experiment, right? Seeing a pre-TGE product come to market as futures on Hyperliquid. Obviously, Pump was pretty much the highest profile one that this could have happened before. The launch mechanism was pretty intricate, where they said, fuck the Oracle prices. We're going to use a weighted moving average of our own price. Also pretty cool. I mean, all in all, I would say the person who won from the Pump Fund airdrop probably was Hyperliquid. Showcasing that this new product was possible. I don't think retail really won on this Pump Fund TGE.
I mean, Hyperliquid liquidates so many people on Pump token. It was up at like 6-7 cents and it went down to like 2 cents. So they're laughing, right? They're laughing to the bank. And
the other people who lost on the Pump Fund TGE are, of course, the ICO investors who bought at 4 cents. I tried to buy, didn't get filled on a variety of centralized exchanges, got my money refunded. I don't know. At the end of the day, like Pump Fund has they're very volatile. Like sometimes they're very obviously bullish on their product and their ecosystem, and sometimes they disappear for 2 weeks on Twitter, and it's a bit of a ghost town. I do want to go on the record and say at some point, I think there's going to be some pretty aggressive crime that happens with the Pump Fund token. In terms of liquidity injection and making number go up. When that will happen, I don't know. That's what I was kind of holding my leverage position, hoping for is like, okay, like I bought, I'm bringing my average down. Come on, Alan, do some crime. And it never came. So I do think there is eventually going to be some liquidity injection, for lack of a better word, into that chart. Because like you said, they have a huge war chest. They have over $1 billion in stables. When that will be, who knows? But I do think that would be a very strong reason why Pump Fund would win the launchpad battle. His number goes up.
Maybe you want to touch on like NFTs just a little bit. Do you think like NFTs are coming back, or is that just like?
I mean, like when ETH started pumping, like 4 weeks ago? We saw someone sweep up. I think it was like 100 CryptoPunks. Pretty big buy. Pretty big buys. I think there is some big whale activity with the mutant apes or with the bored apes. Will they make a comeback? I don't know. My gut instinct is no. I think NFTs were the casino of last cycle, where people were looking for that get whitelist, mint, sell for 3x. I think that need is satiated by meme coins. They're more liquid, they're more accessible, they're probably more addictive. You could probably argue they're cheaper to trade. My gut instinct is that NFTs probably won't make the comeback that maybe some people are expecting them to.
Meme coins will definitely replace NFTs as like the more pure form of gambling, and like unless another more pure, even more pure form comes out, then like it'll just probably stay with meme coins. I agree with you there.
Yeah, it's more appetizing. It's more approachable. Like you no longer have to explain to people that you own a JPEG. It's like, oh no, I just own like 10 million Elon's ass or something like that. It's just a bit more like easy to conceptualize. Yeah, you could argue NFTs are cool tech, digital ownership, blah, 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 blah. But at the end of the day, I think the real product market fit was number go up.
That, and I think there is maybe still like a niche market for real assets linked to NFTs as just an easier way to trade them.
Yeah, and you could also probably make the case that like memberships are a cool use of NFTs. It's like, oh, you own this NFT, you can go to these events. Or if you go to an event, you get an ERC. I think it's 721 is like the soulbound standard. You could probably make that case, but at the end of the day, like people want to gamble. And a TGE that's actually coming up is OpenSea.
Really? Okay. Oh, they're coming back.
They've been I forget if the ticker is Open or C. Or is it OC?
Right. They need some exit liquidity.
Yeah, for a while on the private market, the OTC on their equity was marked down 99%.
I believe it. During their volume was like done.
Yeah, because they even started to lose the NFT exchange battle by the end of last cycle.
Yeah.
Like when everything was shifting over to Solana and like Magic Eden was super popular.
Blur was the big one. That really crushed them because they're like, oh, we're gonna do like, but you can trade on all the exchanges here, and we're gonna like reduce the fees down to like 0.5 or something like that.
Yeah, I remember seeing that OpenSea private equity had been marked down 99% in the bear market, and it's like, well, they clearly need exit liquidity, so we're gonna make a token. I hope they do airdrop some people that were trading on OpenSea last cycle. It'd be a nice like recognition, because at the end of the day, like the streets could use a stimmy.
Yeah, they could, and also just like in terms of like nostalgia, I'd say like flipping NFTs on OpenSea was like some of the most fun I've had in crypto.
Yeah,
way more fun than meme coins.
Yeah, I mean, okay, we were shitting on NFTs, but I will admit, flipping NFTs or like you mint it and it's like the mystery art.
Yeah,
for like
you wait for the
24
reveal.
hours. You wait for the reveal.
Yeah,
that was actually very engaging.
It was fun.
It was fun.
Yeah,
especially if you got some of the rare traits that were like 1% or 0.5%.
Yeah,
I got a banger. My 3x just went to a 10x.
Yeah.
I think NFTs scratched a certain itch in that regard. Do I think they'll come back in the current market context? Probably not. Was it a nostalgic moment in time that I look back fondly on? Yeah. NFTs were fun.
They were fun.
They were super liquid. It was gambling, but meme coins, and I mean, I guess scamming from meme coins rather than scamming from NFT projects, it's much more lucrative to scam with meme coins.
As someone who launched an NFT project, we can't use the scam word.
Redacted?
Selling art. I was selling art, guys.
Yeah, the landscape has changed so much that I think it highlights the idea that you have to be really reflexive in crypto. Like you have to adapt to what the market is telling you. And I say this because I've had a lot of pushback on Twitter as recently becoming an ETH bull.
Really?
For all of 2024, I was relentlessly shitting on ETH. It's underperforming Sol. Sol ETH looks bad. ETH dominance looks bad. ETH BTC looks bad. There's no inflows. That was like the basis for the thesis. And Sol continued to do really well. It set that all-time high at 295. ETH didn't set an all-time high in 2024. And now that I've changed my perspective, people are like, oh, you said blah, 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 blah. And I'm like, I said that. It was true in 2024, but you have to be really fucking stupid to never change your opinion in crypto.
Totally, man. Your ability to adapt in this cycle has been your ability to make money.
Yeah. Like you have to pay attention to what the market is telling you because otherwise you're just going to be left with very, very heavy bags.
And dude, I still get people commenting on my videos like Bitcoin, like
I'm only going to buy Bitcoin I don't buy Bitcoin because I'm only going to get a 2 or 3x. And it's like, okay, so you're going to hold altcoins for what, a negative 80%?
Yeah. It's like you haven't seen these like daily $100 million inflows into the ETFs. It's like you gotta take a look at the bigger picture here.
Yeah. I really do think that the biggest risk that crypto investors have currently is understating the importance of traditional finance. And whether it's the ETFs, whether it's the options, or where the money is actually coming from, I think failing to see that trend is very dangerous to people's portfolio.
Yeah.
Because at the end of the day, like, it's very obvious that crypto is just the new Wall Street.
Yeah.
And so you need to study Wall Street's tips, tricks, and scams in order to better understand the direction that crypto is going.
Yeah. You just remind me of some like really interesting point that I used to talk about quite a bit. It's just like which has to do with Bitcoin and like I like to say serendipity with how it was created and the foresight that Satoshi had to like remain anonymous, to step away from the project and to burn all of his coins, essentially burn his coins that he was mining. It's like something that could just never be repeated. And it was done so perfectly that like it truly made it gold 2.0. And so like he followed through and like completed that goal in a sense. And I don't think any coin will ever like overtake Bitcoin's market cap just because of all of those factors. And it's kind of like the cat's out of the bag sort of thing, where you could never like start a new blockchain, which isn't like obscenely funded by like VCs, where it's like super concentrated in just a few people's like wallets.
Yeah, I think like the buzzword there is it's democratic. Everyone has an opportunity to own Bitcoin. Yeah, MicroStrategy owns a fuck ton. Yeah, the US government owns a lot. But at its core, it is like the most accessible digital asset of all time, and it's fully trustless, right? And so I agree. I don't think we're going to see a crypto flip Bitcoin because Bitcoin is the gold standard. And what it has done cannot be repeated.
Totally. I would even go out and say it's the only crypto that I would consider hard money.
Yeah.
And that makes it, that puts it in like an asset class of its own.
I mean, speaking of hard money, there's that really cool website for Ethereum called ultrasound.money.
Yeah.
ETH is still inflationary. Despite all of this like wonderful price action. So when ETH gas, I believe, fact check me here, when ETH gas is above 20 Gwei, ETH is deflationary. ETH gas is a function of demand, right? More transactions to the network, the higher the ETH gas. Despite all of this wonderful ETH price action, people still aren't using the network. So ETH gas is below 20 Gwei, so it's inflationary. And I think that's super funny because ETH's narrative for a long time was, its transition with Beacon Chain from proof of work to proof of stake is going to make it the hardest form of money on planet Earth. It's going to be better than Bitcoin because Bitcoin's not deflationary and ETH is. But here we are in 2025, and from the time of Beacon Chain in December 2020, if I'm not mistaken, until now, ETH supply has increased.
Yeah. I know that they're doing these, they have like the layer 2s, and I forget what they're called. Like, I want to say, we can redact this part, but like bubbles or something like that.
Sharding? There's proto sharding.
I forget what they call it. It's like some fees that the L2s are supposed to pay up to the Ethereum mainnet, but right now it's not even like close to enough. And so what's happening is you have like base chain and all these other L2s which are farming Ethereum, and essentially they're incentivized to dump it on the open market to, extract money, because these are still companies in the day. So it's not adding to the price action.
No, and I mean, it was a couple months ago now, but remember when the ETH Foundation was getting shit on Twitter?
Yeah.
Because they were like selling, and then they were publishing their balance sheet of like how much they were paying people and stuff.
Yeah.
And there was one creator called Tetranode that has sent them millions of dollars over the years.
Really?
To support their balance sheet. And he wrote like a super long post basically calling them like completely inadequate because they hold so much Ethereum, but they don't even like supply it to Aave, for example.
Yeah.
And it's like if they supplied, I think it was 50% of their ETH stack to Aave to earn interest, it would cover 75% of their balance sheet. And it's like, you made this super awesome product, but you're not even using it to sustain your own business.
Yeah. I think like they weren't even like staking or something like that.
Yeah.
Like that.
Yeah, it was just
contention.
Complete mismanagement, no liquid staking, no DeFi engagement, no network staking, just market selling ETH whenever it's near somewhat of a local high.
I think there has been some major changes though to the ETH Foundation. So like now they have like a whole like working group that's trying to go on Wall Street and is helping establish these treasury companies. So I feel like they heard the feedback and there actually was some changes, which I'm like pretty stoked about because obviously I've been an ETH bull since like 2017.
Yeah, I remember I met someone who worked for the Ethereum Foundation at Bitcoin Nashville.
Yeah.
And he was a Chad. And I remember talking to him about like how the organization was structured. And he just kept saying, we're fucked. So I think something like you said may have changed in the background because they do appear to be engaging with Wall Street more, which, I mean, it might be bad for Ethereum's PR in terms of, TradFi is just going to buy all the Ethereum. It's not going to be democratic. But
good for number go up.
Good for number go up, which is like, price is the best marketing.
It is.
It is. It doesn't matter if your product is absolute dog shit. If it's going up in value, people will find a reason to like it. It's like, which came first, the chicken or the egg? Or which came first, the cult or the moon?
Yeah.
Right? And so it's the overarching theme in crypto that unfortunately, price is the best marketing.
Yeah, that's it.
And on that note, it is time for us to end the episode. We're back recording.
Yeah, that's it for Eggs Liquidity, episode like 6 or something.
6.
I think it's 6.
Maybe we'll pump out a newsletter shortly after this as well. Treat you guys to a nice office.
Yeah, we gotta do this more often.
Yeah. Thank you so much for tuning in. Take care, everyone.